First, though, the interest rates decision. Today, rates on hold at 0.75%. Let's go to our business reporter, Edward Boyd. Ed, what's the initial reaction been?
Kieran, the initial reaction has been the Aussie dollar has dropped slightly. It's now at 66.82 US cents, but the decision today is not really a surprise. And joining me now here is AMP Capital Chief Economist Shane Oliver. Shane, what's your reaction to the RBA's decision today?
Not particularly surprising. If you go back a few weeks ago, we were looking for a rate cut this meeting, but of course we've seen some good jobs numbers, the unemployment rate falling to 5.1% a couple of weeks ago, and then we saw the inflation numbers not being low enough to tip the Reserve Bank over in terms of a cut. But I think the reality here is that most of the economic data the Reserve Bank is referring to that it's got before it relates to late last year. Since then we've had the bushfires intensifying, we've had the coronavirus. I think the threats to the economy have escalated, and therefore I do think it's only a matter of time before the Reserve Bank does actually cut interest rates again.
Yes, how many cuts are you pricing in this year?
We're looking for 2 cuts. Obviously they didn't move today. We had removed that late last week, that removed that forecast for today. We pushed it out to March, so we're looking for 1 in March and another one a couple of months later. So by the middle of the year, we'll be looking at a cash rate down at 0.25%.
And if the cash rate does get to 0.25%, what more can the Reserve Bank do to stimulate the economy if it's not growing as much as they're hoping for?
That's right. The Reserve Bank has been forecasting 2.75% growth for this year. I think just looking at what they're saying there, they're still assuming that. We think it's going to be down closer to 2%, particularly with the bushfire impact, coronavirus and so on. So as a result of that, what can they do? They have said they probably wouldn't cut rates any further than 0.25%. They're not going to go negative, but I think they can do quantitative easing. Is that the optimal path to go down? Probably not. I'd rather see more fiscal stimulus, where you can be more assured of an impact on the economy than monetary stimulus. But I think in the absence of that, they're going to go down the QE path.
You mentioned the coronavirus. What sort of threat to the economy do you think that's going to pose over the next few months?
Well, it all depends on how long it goes for. If you just take the travel ban, obviously that affects Chinese tourists coming to Australia. They amount to about 0.2% of GDP. So if the travel ban is extended beyond 2 weeks and goes for, say, 2 months, you're looking at a detraction from Australian GDP growth just because of an absence of Chinese tourists coming here of around 0.1 to 0.2% for the March quarter. When you put that together with some impact on education export earnings, don't forget Chinese people account for 0.6% of our GDP in terms of education export earnings, then you're looking at another drag. Obviously that will start to show up the longer the coronavirus scare continues for. So it really depends on how long it takes before the virus is contained. If it's short-lived, contained in the next month or so, any impact will be short-lived and the economy will quickly bounce back. If it goes beyond that, then you're going to see a bigger impact. The main impact, though, will show up in the March quarter. We are now looking at March quarter GDP growth pretty close to zero or maybe even negative, given the bushfires and given the coronavirus impact.
Yeah, I wanted to ask you about the bushfires. Obviously, coronavirus is a bit of an X factor, but bushfires has been ongoing since about November. What's your views there on the impact that will have on the economy as well?
Well, that's going to be another drag, and that's going to knock off around 0.4% from the economy. Always with these things, a big range around that, but our central estimate is a 0.4% drag. Most of that will show up in the current quarter. So this quarter we're looking at roughly a 0.3% drag from the bushfires and a 0.2% drag from the coronavirus, which can quite easily take us negative, given that the economy's only been averaging 0.4% growth over the last 4 quarters. It's quite conceivable we could have a negative quarter for the March quarter. Then the question becomes, how quickly do we rebound? Sure, there'll be rebuilding from the bushfires, but the impact on tourism from the bushfires will linger a lot longer, and the impact on confidence might take a while longer to recover as well.
Shane, thanks very much for joining us. Kieran?